All right. It's Uncle Bruce here from Tokyo, and it's Wednesday, August 6th for me, but it's Wednesday, August 5th for you because right now, as I am recording this video, it's probably around 5:30 my time in Calgary, about 7:30 Eastern time when I'm on the air. By the time I get this video posted, it'll be half an hour later, probably 8 o'clock tonight. So it's a post market kind of recap. What did I do today? Well, I got hit yesterday with a little bit of jet lag. That's finally catching up to me. And I got a little extra sleep in yesterday. So I was late to the party. I did join the market about half an hour after it opened, 40 minutes, which didn't bother me really because, my thinking is, as I've been telling you, let the market show itself and let's see what really happens before we make a move. And then what I ended up doing today is I did some trades on Qs today. I was into the Qs today, triple Qs, and I still have a position in GameStop. I've got some Jan 26 $25 cash secured puts written, and I got those out at about 550. They're trading now around 505, 517. Quite happy with that. Love to see GameStop go GameStop. Now on the Qs, what I decided to do today was something a little different. I was going after lesson 3 and 4. If you've taken my lessons, you know what I'm talking about. If you haven't taken my lessons on how to write stock options, you are playing with fire, my friend. You want to definitely head to my website and pop in there, stockmarkerswithbruce.ca. Get yourself over there and grab a couple of these lessons because I'll tell you right now, we got some good ones in there. I think there's some pretty good ones. If you go here, you can click into my class section, and then you'll come into my classes. Number 1 and 2, absolutely the most important there are to get you started, how to learn what options are and how to start trading them. But 3 and 4 today, I want to talk about these guys using aggressive trading strategies to profit from stock options. And how you can also use aggressive trading strategies if you want to write options as well. Very important to learn this. Sometimes you can be aggressive, sometimes you can't. My thinking today was, since the market had such a bad day yesterday, my thinking was to look at a little bit of a volatile day, 3-4 point moves on the Qs. And I want to take advantage of that. So what I ended up doing today was I did some actual purchases of contracts. That's going on the casino floor. I was buying 0-day to expiry contracts that died today. I was buying calls and puts on both sides of the market. Now, if you were to do that, let's say the market's at 560 and you buy a 560 call and you sell a 560 put, that's a straddle. You're literally at the same level on the index. You got a call the call will go up if the market goes up. You got a put that goes up if the market goes down. So the question is it enough of a move up or down to make you money? If you pay $1 for each contract and the market only moves 15 cents each way, both contracts will eventually go to zero, and that's the problem with a non-volatile market. On the other hand, if you write a call and a put at the same time, at the same strike, and the market moves 3 or 4 or 5 points down or up, then the winning contract could be worth more than both contracts cost you in the first place. My strategy was, I want to day trade these. I want to get a call and a put, and if the call goes up, I want to flip it. I want to sell it. And if the call comes back down, I want to buy it back. If the market goes lower, then I want to make a profit on the put. I'll sell the put. And if the market recovers, I'll buy the put back. Now, there's multiple ways of playing the strategy. You can do this where the call goes up, and of course the put will go down because the market went up, and you flip out the call and you then buy additional puts because they've become cheaper. And now if the markets come back to equilibrium, those second batch of puts are in profit. You flip those out, and now you're back to your initial position. And if the market then even drops further than what it did here, it goes further, you sell the first batch of puts that you bought, and you make profit on those. Different way of playing it. So what I did today was, I'll show you here with regards to the market. Let me put this up here on the screen. Here's what we have here. This was today's opening, as you can see on the left here. And if you'll notice that in the first, like by 10:30 in the morning, if you look at the bottom of the chart there, you'll notice that the market started to bottom out. And little did we know that that would be pretty well the bottom of the day, or awful darn close to it. And then by 11 o'clock, 11:10, we had a bit of a recovery. And that is where I got in. It was this point in time where I decided, okay, we've had a bit of a low. Maybe this is the point to get in. As this market was recovering, I made my first move. And what I did was I purchased some puts at 559. At the time, the market was 562. I bought 559 puts and I bought 564 calls. So I was about $2 ahead of the market on the calls, and I was about $2 behind the market, $2-3 behind the market on the puts. And you'll see the market tipped a little higher, and then the market began to back off a little bit. The calls did not deliver. The calls, I bought really that 11:15 level where we topped out. That's where I got in on these first batch of calls, and they began to deteriorate. However, the puts began to move up, and I was able to sell those puts that I purchased at 79 cents, which was an 11-cent gain. But before I could do that, I had to purchase an additional batch of calls. I picked up some 562s, and I decided to get closer to the market rather than be further away from it. And those came out nicely. I ended up selling those later in the day at 124. So an 86-cent buy with a 124 sell. Those calls that I bought for 44 cents in the first thing in the morning, I gave up on them at the end of the day, towards the last 2 hours. 13 cents, they just weren't coming back, and I got out. But another move I made as the market meandered along, when it was at 561, and that would be more like a 12:30 range, I was able to acquire some 559 puts at 45 cents. Sold those later at 79. And I also picked off some at 562 or below. I started buying some calls. I bought calls at 102 and at 63 cents. As the markets were wavering along. And this is between this 12 and 12:30 neighborhood here, where you saw that rise where we couldn't hit a newer high than we had at 11 in the morning, and we backed off. And so I bought calls at the higher level and then lower again. And wouldn't you know it, by 1:32 o'clock, the market kind of plateaued there. Little did I know that would be the best level we'd get for the rest of the day. And lucky for me, I had purchased 63-cent calls and sold them at 84, and I purchased 102s and gave them up at 104 because that's as good as it got, and escaped with a little profit, if not covering my commissions. So I ended up with 5 winning trades and 1 losing trade today. I had 5 winners, 1 loser. The best of the winners was an 86-cent buy and a 124 sell. Those are on 562 calls. And then puts, buying them at 45 and selling them at 79. That was the second best trade of the day. Those two essentially made the day. The very first trade I did, buying at 68, selling at 79 for these 559 puts, made a little bit of money, but unfortunately the calls that I bought at 44 and losing at 13 cents, they took some of the profits away. And at the end of the day, for me anyway, buying a 63-cent 562 call and getting 84 cents for it, and then ultimately blowing a 102 call, that same call out at 102, selling at 104, locked in a bit of a profit there. So I made money today. Did I get rich? No. Was I risking a lot of money today? No. I played with very, very few contracts on this day, because I am now experimenting like you do when you get into how to trade options full time. When you become a full-time option trader, I'm now watching the computer all day long. I'm not worrying about making videos and coming on the air and anything else, where before I would never have had the time to do what I'm doing now. I'm able to now pay full attention to my trades and stay on top of these, and literally watch pennies and nickels and dimes turn over. My strategy would have been, if I were doing this a month from now, I'd be doing this with far more calls and puts. But I'll tell you right now, I wouldn't be taking any calls and being disturbed by anybody. I'd want to be watching the market very, very closely. When you go long, you have to have a hair trigger. And this is not for the faint of heart, and this is not for anyone who has a day job. If you've got a Zoom call, even at your house, and you're at home all day long and you have a Zoom call to make or whatever, you can't do this strategy. It's you're going to lose an hour and a half of your time, and there may be in that window 3 or 4 trades you could have made that made your day. In my case, I shut down everything well before the close with a few hours to go, and I was done for the day. And I shut everything off and I went back to sleep, because here it's in the middle of the night. It's we start at 10:30 at night here in Tokyo, and by about 1 in the morning, I was pretty well done. And so this disciplines me to have a limited window of time to do my trading. And today I thought, well, rather than writing a spread that I might have to wait till the last hour to execute, let's do this instead and take advantage of swings, and we'll see how things go. Now, you may have heard how the markets are now approaching, again, very rich premium prices. The PE multiples on the S&P 500 is hitting very high levels. August, September are the most depressing months for the markets. They don't perform well most of the time, or more majority than minority. And corporate activity is at its lowest level as well. Coupled to that, on top of that, all the tariff talk that is now beginning to dominate the media. I believe that the Qs have reached again their best levels, give or take a few points. I think we're just about there. And if you stay ahead of this market with call credit spreads, I think that's where the money is. And if you go 0 day out, 2 day out, 1 day, 2 day, 3 day, 4 day, I think it's an excellent strategy, especially if you can write a spread that is $4, $5, $6, $7 ahead of the market at all times. Can you be 1 to 2% ahead of the market, even up to 10 points? That is a great place to be on credit spreads. That's my little day, what happened here. We'll see what happens again for tomorrow, which for me will be late this evening, my time, now that it's 8:44 in the morning. In 13 hours from now, I'll be gearing up, and 14 hours from now, I'll be ready to look at this market. Thank you all for joining me, and we'll see you next time. Check out my classes, stockmarketswithbruce.ca. Learn how to write options. There are 19 lessons waiting for you. You can grab them and watch them as many times as you like, and they're in plain English, and enjoy. Please have a great rest of your day today, and we'll talk to you probably tomorrow from Tokyo. Take care, everybody. Bye for now.